Amazon just joined the Dow. Not the most Dowish stock, which I
Yeah.
think is the point, at least from the Dow's perspective. You wrote a good piece on this yesterday. Um, what's sort of who benefits more from this, or is this more just a speaker at a graduation getting an honorary degree?
Yeah, that's a decent way to put it.
Yeah.
So the rationale behind it was Dow is booting out Walgreens Boots Alliance, which is completely deserved. Stock's down 65% since it was added to the Dow in 2018. Peer Rite Aid filed for bankruptcy last year. Walgreens has been talking about trying to spin off its Boots arm, which is their UK pharmacy unit, which is a headache for S&P Dow Jones, who manages the Dow Jones index, because if they're doing spinoffs, you then have to like revalue the position, reassess whether it belongs anymore. You can't turn it to the Dow 31 because Walgreens spun off Boots, and now Boots is is a separate company. So they sort of get ahead of that. The other element was Walmart's price split, their share split, their 3-for-1 stock split. The Dow is a price weighted index, which is part of why nobody invests in the Dow and index funds aren't really pegged to it. So what that ends up doing is it scales back the Dow's exposure to consumer retail spending by about 2/3 just because of an accounting trip that essentially triples Walmart shares, right? It doesn't change the business model. It doesn't change their market cap. So they needed a consumer retail spend replacement. And, Amazon, we've talked before about Amazon generating plenty of revenue from video streaming, ad serving. Amazon Web Services is a big revenue driver for them. So it doesn't seem like necessarily an ideal fit to replace a lost consumer spend, right? I would, if I was just trying to capture that, I would probably go with somebody like a Costco.
Yeah.
Um, but the one thing that Amazon has is the e-commerce element because they own about 38% of online shopping, and that has been growing really, really rapidly. So since 1995, annual online spending has increased at a pace of about 7.6% a year. It's been taking share from in-store shopping, and it's a feather in the cap for Amazon. It's an acknowledgement that not only is shopping online, but they're one of the primary drivers for that. But when it comes to investors, it doesn't really matter.
Yeah. I mean, it's so I think one of my defendant takes late last summer was that the Dow was a better gauge of what's actually happening in the market. This was amid, the height of Magnificent Seven influencing there being a disparity between both the Dow and maybe more the S&P equal weight index and the actual S&P because of the heavy influence of the Magnificent Seven. Well, now one of them is part of the Dow, which maybe makes it more of an accurate gauge because the Dow before didn't really have, Mag 7 exposure. Now it does. Um, and so I think that might make it that it's not, so that it's not lagging, you know, what the S&P and NASDAQ are doing as much as it has been in the past, which could make it maybe more reliable. I don't know. It's one company, but it's only, Dow's only 30 stocks.
I mean, so Microsoft is one of the Dow constituents.
Sorry. Yeah. Yeah.
So like there's some Mag
But probably
7
the
in there.
least sort of exciting of the Mag 7, at least in the newsy of the Mag 7. It's the most Dowish of the Mag 7. Amazon's more of a headline grabber, I guess.
Yeah, I do. I think your case is well stated. It does make it more representative of how the U.S. economy actually works. Um, but like I don't know. I mean, ultimately, it's a widely quoted number. The reason it's price weighted is because when the Dow was originated, it was too hard to calculate market cap every day. Like just didn't have computers that could do it, so you'd be manually reweighting what the performance would be.
Yeah.
Um, so it's very much a throwback index, but it does its best to try and capture what's happening with the American economy broadly, with the exception of transportation and utilities, which are both in the Dow Transportation Index. And I think that it does an admirable job of that. But for all of its all of its successes in reflecting the economy. Um, there's really no money tied to it. The largest indexed investment to it is the DIA, which is a $30 billion ETF. Aside from that, you've got a handful of mutual funds that are pegged to the Dow that are in the, you know, tens of millions of dollars and not in the billions of dollars, because it's really just I don't know. I mean, there's like the optimism in America and invest in America thought process could maybe justify investing in the Dow, but from a quantitative standpoint, it's like it's not giving you diversified exposure to different sectors. You can't really hedge. Like, what if I have a big position in the Dow? You know, I'm
Yeah.
individually hedging every single constituent. So for that reason, it's not going to be a big driver for Amazon, but it's a pat on the back. It's a
Yeah, no, I
honorary
think the Dow
degree.
needed Amazon more than Amazon needed the Dow.
And
Like I said, it's honorary degree for Amazon, whereas the Dow sort of needed it to, get with the times a little bit more. This gives them
yeah,
sort of a hipper feel, or hipper in the sense of like, you know, uh, my dad turning his hat backwards, kind of that kind of way.
yeah,
It's
yeah,
not
and
actually hip, but they're trying.
it does make it better representative of the economy. I mean, like everything that we're saying about Nvidia and the growth of AI and how that's been such a huge driver, how companies are spending tens of billions of dollars. They're making $20 billion a quarter. Like that AI element, other than the Microsoft position, is not captured. That innovative tech that is really driving the markets right now and could drive the economy. I mean, the monetization is still not totally there for AI, but the business spend is certainly there. Yeah, I think that makes it more representative.